Alright guys, in today's video I'm going to be going over how I do my top down, how I do everything basically, like how I find a trade. So we're going to do that today on just any market in general. So usually when I start off the day when I'm trading, whatever I'm usually starting off the day, I start off on the monthly here and then eventually on the daily. So it's going to be the monthly and then the daily. Usually after that I look for a confluence on the monthly, and I usually mark out my buy side and then the sell side on the monthly time frame, because to me that's more important than anything, because you gotta have a clear direction on where that monthly candle's going. Basically, ICT talks about how he wants to see the weekly candle print. Me, I like to see how the weekly candle prints with the monthly candle too. So for the week, if we're gonna create the higher low Tuesday and then the higher low for Thursday, same thing with the monthly candle. If we're gonna create the higher low the second week, or if we're gonna create the higher low the fourth week, and I try to align that with seasonality and like that yearly power three too. It's like that's a whole different category in my opinion. But and then here on the daily time frame here, all I look for is time frame pairing, of course, confluences that align together. So we have that monthly order block here. What do I see with that monthly order block is a sell sign imbalance that was created, and then eventually here we have a weekly sell sign imbalance. But nonetheless, what do we have up here? We have buy side and we have buy side up here. So what I'm going to draw is this up here is relative equal highs. I feel like that's more of a reasonable area to target on the daily. So we're going to have that there just in case we do start to expand up higher and go past this inverse if we do continue higher. But nonetheless, after that I drop on the weekly. Then on this time frame I drop on the 4-hour, and then eventually I don't want to see this on the weekly. So then here I'm like, all right, hold on. What do I see on the weekly? What do I see here is a sell sign imbalance that formed, and then eventually I see a mean threshold of an mitigation block, a bearish mitigation block. But then here, what do we see again? A inversion fair value gap with this right here. I didn't mark it out. Main reason why, because it's a balanced price range, but we already ran right through it, and then we have it aligns perfectly with the mean threshold of that mitigation block. So to me, I'd rather have one confluence, and I don't want to clutter my chart with too many things. You can see we already cluttered it too much. But nonetheless, if we go back to the daily, I forgot to talk about this. We had an inversion fair value gap, then we ran right through it. To me, this fair value gap isn't as powerful in my opinion, so I'm going to delete it pretty much. And usually when fair value gaps are like that, I don't like classifying them or keeping them on my chart anymore, because they just got ran through and they disrespected both sides. So it was eventually a buy side imbalance, but then it got inverse, and then eventually it ran right back above it. So it's a daily PDA array too. So to me, that just seems like it just wasn't a good PDA array in my opinion. I like keeping the PDA arrays that are working, that are strong, and that are reasonable. So here we have a SIBI. I'm going to be watching to see if this week we can close above it, make it an inversion for value gap, and then on the 4-hour time frame, that's was giving me more confluence. Is the 4-hour time frame here inside of that SIBI. We disrespected a sell side imbalance. So yesterday I was watching to see if we had that sell side imbalance on this weekly time frame right here, respected with this one, so we can align that together and then eventually drop, form a buy side imbalance here, but not close above it, and close inside of the range, and then eventually form an inverse. So basically here what I wanted is a candle like, okay, I'm gonna show you guys, I'm a demonstrator. So I would have wanted a move higher and then not closing above it, drop and make it an inverse, tap in the inverse, and then dropping further. And while we have that move here, like this, boom, we have a move here, a buy side imbalance, eventually make it an inversion fair value gap. We retrace back into that, and then eventually we drop further. That's kind of what I've wanted here, but we never got that. So to me, I never took the trade. And then eventually I would have aligned that with the 15-minute time frame. Then the 1 minute took the trade there, or even just on the 15, I would have took it because it's on the weekly confluence. I don't need to go any lower, but sometimes I do go lower, and that's 4 PDA arrays. Again, my model, that's 2.5% risk. Take it, target some form of sell side, and then sell side. But I'm not going to hold it that long, since the model probably passed the trade around here if we do drop that far. But nonetheless, here I drop from that weekly to a 4-hour, and then I go here on the 15-minute time frame. But if I do have so the thing is, when I'm dropping down, right here I'm doing a top down. This is how I usually do my top down. But if I have a confluence like a certain PDA array on a certain time frame that's super clean, then I go on certain time frames and I don't skip them. I don't move away from them. So if I have like a daily PDA array like up there, I just go on the daily and I have the 1 hour right here loaded up. That's it. That's all I'm watching. Here. That daily PDA array with this right here. And I'm just gonna wait for here Boom, we tap into the CB. I'm gonna look for what displacement or market structure shift to occur, and then forming my model. It changing the state of delivery, or it can be a market structure shift with the CB. We retrace and we drop further, but we never got that here, and we never had a change in the state of delivery like a buy side imbalance up in here, become an inverse. So I know a lot of people are gonna drop down to like the 1 minute, the 1 hour, and the 5 minute, and look for certain trades in there. But for me personally, I wouldn't even want to take a trade inside of this market condition. We drop, then we come back down. We drop, then we come back down. I mean, we come back up, we come back up, then we drop, come back up, drop, come back up, drop. And to me, we have no hourly PD array in here. So why would I want to take a trade inside of here if we have no hourly PD array? I'm gonna just go to a different market. As simple as that. I go to a different market and I view the other markets. But nonetheless, here, if I have an hourly confluence, I go down to the 5 minute right here and I have it loaded up. So like again here, CB becoming an inverse. All right, boom. And then we have this right here. I forgot I upgraded, but I waited for the close. All right, boom. And I go down to the 15-minute time frame, and I go down to the 1 minute right here, and I look for that right there on the 1 minute. And I see if it aligns with my time elements. It does. All right, and I look for a 15-minute confluence to transpire. I would prefer a retracement into that, but we never got that. Sometimes we never get that, and that tells me a strong signature that price is really bullish. This happened with gold. Gold barely tapped into a 4-hour, a 15-minute BISI, and then it just started rallying, and then had that 1 minute change in state of delivery like this, and we never came back up into, or came back down into the change in the state of delivery on the 1 minute. But then, even then, I would probably look for what, since I know the 4-hour PD array is bullish, the 15-minute we had change in state of delivery, we're going to be bullish. Here, it tells me, we're going to reach for buy side automatically, and I target the buy side liquidity. I can wait. I mean, you can wait for this right here. The retracement here is not bad in my opinion. The RR won't be skewed at all if you're using the 3 PD array rule on the 1 minute. Even on the 15-minute here, it won't be bad, but nonetheless, it's still valid in my opinion. We have a change in state of delivery once we close above that candle. So we close above that candle. What do? We enter there. Where's my next stop loss? Right here, the low. And then where do I target? I target all the way up here. I know it may seem naive, but I probably would target right here if I'm being completely honest. Since it has a buy side and sell side imbalance here, and it has 3 up close candles, mitigation block, and I would probably target that. And then you can see here we came back, retrace. So I probably would have got stopped at break even, because this would be my first PD array holding. Buy side imbalance, so first one, your second one, your third one. You can see we held and we pushed up higher, and we eventually met that area that you were targeting. So nonetheless, here, nothing but strong PD arrays forming off of that 4-hour confluence, aligning it with the 15-minute. That's all my model is. That's all I do whenever I'm trading. But nonetheless, hopefully you guys are enjoying this little documentary from January. So if you're watching this like in March, April, or May, kudos. Hopefully y'all are passing funded accounts. So yeah, peace.